And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. The tax wars have come to ETFs. Senate Finance Committee Chairman Ron Wyden has proposed a new tax on ETFs to help pay for the $3.5 trillion budget plan. The measure would stop investors from avoiding capital gains on so-called in-kind transaction. This allows traders to swap the underlying assets for another without producing capital gains. It's one of the primary tax advantages of ETFs. The ETF industry is fighting back, though. Let's talk with Eric Pan. He's the CEO of the Investment Company Institute, which represents mutual funds and ETFs. Tom Wyden, my old friend from ETF Trends. Eric, briefly, what is an in-kind transaction? Why do the Democrats want to tax it? And why is this a threat to the ETF industry?
So, in-kind transactions are how ETFs manage their portfolios to ensure their prices follow the market. Senator Ron Wyden wants to tax these adjustments and basically to raise money. But it's bad policy because it's going to punish investors. People who are trying to invest for the long term are going to see tax bills every year. They're going to see more taxes. And this is going to discourage them from doing long-term investing. This is exactly the wrong type of policy that we need right now. We should be encouraging people to buy and hold, save for the long term, save for their retirement, save for their education. It's also going to affect middle-income Americans. $125,000 is the median income of 12 million American families that own ETFs. And 92% of them have incomes below $400,000, which is Joe Biden's line for not raising taxes. So this is just bad policy.
You know, Tom, this isn't the only tax proposal that affects the financial business. Biden also wants to boost the capital gains rate, which is now top rate of 20%. How would that proposal affect ETFs?
Well, one key thing, high tax rate is going to go 37 to 39.6, but also if you're making more than $1 million, they're talking about boosting the cap gains rate up to 39.6 as well. I think the key point that Eric's pointing out is for the average ETF investor, and Biden was really clear. He said, if you make under $400,000 a year, don't worry, I'm not going to tax you. 92% of households that own ETFs make under $400,000 a year. And in fact, the median household that owns ETFs makes $125,000 a year. So that's not really fair. I think if we were thinking about people like Jack Bogle, he'd be rolling in his grave now, because Eric's right. When you think about our kids who are saving for the future, who are going to live longer, and they can't really count on Social Security, Bob, this is going to be a big blow if it goes through.
Yeah, it's certainly one of the big advantages in the last 10 or 15 years is the great move up and the explosion in ETFs. This certainly would put a dent in that. We're going to